A very good afternoon, investors. You're now on Kleverstock with me, Wan Izul Islam. Now, we've got the midday roundup for you. We're going to be kicking it off with Bursa Malaysia updates from this morning up till this evening. Now, Bursa Malaysia, the APM KLCI opened slightly lower. Kicking it off with Bursa Malaysia updates. The APM KLCI opened slightly lower on Wednesday after a 4-day rally that pushed the benchmark index to its highest closing level so far this year. Now, at the opening this morning, the index slipped 2.99 points to 1,645.32, though it remained on track to end the year at an annual high. Now, Rakuten Trade said a decisive breakout above the 1,650 level, supported by strong trading volume, would reinforce the bullish bias and pave the way for a move towards 1,670. They noted that for today, we anticipate the benchmark index to trend within the 1,630 to 1,645 range. TA Securities echoed the cautious outlook, noting that the lack of fresh domestic catalysts could keep the market range bound and prevent a breakout from its current consolidation phase. Now, the research house said that immediate resistance is revised upwards to the August 2024 high of 1,684, with the next upside hurdle at the December 2020 high of 1,695, followed by a stronger resistance at the 123.6% Fibonacci projection, which is at 1,759. On the downside, immediate support has been adjusted higher to the 76.4% Fibonacci retracement level at 1,610, with stronger support at the 61.8% retracement at 1,564 and the 50% retracement at 1,527. Profit taking was seen among selected blue chip stocks following recent gains. Press Metal eased 5 cents to 6 ringgit 88 cents. IHH Healthcare slipped by 5 cents to 8 ringgit 67 cents, while CIMB declined by 4 cents to 7 ringgit 94 cents. Glove maker Top Glove rose by 1.5 cents to 65 cents ahead of its quarterly earnings announcements that is due later today. Among the most active stocks, TWL was unchanged at 2.5 cents, Valesto was flat at 27.5 cents, while VS Industry gained by 1.5 cents to 50 cents. Moving on to our local currency and foreign exchange, the ringgit strengthened against the US dollar in early trade on Wednesday, extending its recent gains to hover around the 4.07 level. That is its strongest showing in nearly 5 years, supported by, of course, a firmer domestic sentiment and also softer greenback. Now, at around 8 a.m. this morning, the local currency rose to 4.0765 or 4.0935 versus the US dollar from 4.0835 or 4.0875 at Tuesday's close. Now, the ringgit was last seen at comparable levels on March 3rd, 2021. when it ended the session at 4.0720. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid, he said the cabinet reshuffle announced by Prime Minister Datuk Seri Anwar Ibrahim yesterday had provided greater clarity on policy direction and implementation, boosting local market confidence. Afzanizam said yesterday the ringgit closed higher by 0.24%. Today, it could remain stable as the latest US data may trigger some profit taking. On the external front, he noted that the US dollar index slipped by 0.10% to 98.215 following mixed US labor market data for the month of November. Now, US non-farm payrolls, or NFP, rose by 64,000 in November after contracting in October, while the unemployment rate increased to 4.6% amid higher labor force participation. Wage growth moderated and retail sales slowed, pointing to more cautious consumer spending. Now, Afzanizam added that expectations for a US interest rate cut in January remain low at around 20%, with most traders now anticipating 2 rate cuts for the year 2026. At the opening, the ringgit traded firmer against a basket of major currencies. Our ringgit strengthened against the British pound to 5.4727 or 5.4955. It appreciated against the Japanese yen to 2.6346 or 2.6457, and it rose against the euro to 4.7895 or 4.8095. Now, the local currency also advanced against most ASEAN peers. Our ringgit improved against the Singapore dollar to 3.1620 or 3.1757. It edged higher versus the Thai baht to 12.9524 or 13.0147. And our ringgit was marginally firmer against the Indonesian rupiah at 244.2 or 245.3. Finally, it inched up against the Philippine peso to 6.93 or 6.97. Up next, we've got some local economic news. Malaysia's trade performance is expected to have sustained its robust momentum in November 2025, and that's supported by strong electrical and electronics or E&E exports, as well as lingering pre-tariff front-loading effects, economists said ahead of the release of the official trade data later this week on Friday. Now, exports for the first 10 months of the year grew by an average of 6%, up from 5.1% in the same period last year. October exports had exceeded expectations, surging 15.7% year-on-year to a record 148.3 billion ringgit, marking the 4th straight month of growth. Now, the gains were driven by front-loading of US-bound shipments ahead of tariff deadlines, stronger demand from the European Union, China, Singapore, and Hong Kong, and resilient manufacturing activity, particularly in E&E products. Now, research analyst from iFast Capital, Kevin Kao Kai Sheng, he said that while front-loading activity is nearing its end, it is still likely to be reflected in November's figures. He said November's trade performance was expected to sustain the momentum seen in October, although front-loading effects may fade in the first quarter of 2026, potentially leading to a softer start next year. Kao added that while export volumes may slow due to a high base effect, export values should hold up, with services exports expected to take a bigger role next year, particularly under the Visit Malaysia 2026 initiative. He said stronger tourism receipts could help keep Malaysia's balance of payments healthy and partly offset softer trade growth from the fading front-loading effect. Kao also pointed to continued government efforts to support higher-end chip manufacturing, which he expects to help sustain technology-driven exports into the year 2026. Meanwhile, UOB senior economist Julia Goh projected November export growth of 12.5%, and that's driven by broad-based gains across key segments. Now, she said improvements in export-oriented production in October and the new orders index in November pointed to sustained export activity. Looking ahead, Goh maintained a positive outlook for Malaysia's trade, supported by reciprocal tariff arrangements and the one-year US-China trade truce, although growth is expected to moderate in the year 2026. Now, she added that gradual ringgit appreciation could encourage quicker conversion of export proceeds, improving liquidity in the market. Now, economists have flagged uncertainties around potential sector-specific tariffs on semiconductors and the pace of China's economic recovery as key risks. Mr. Kao noted that the United States' ongoing Section 232 review of the semiconductor industry could introduce future tariffs, creating uncertainty for Malaysia's currently zero tariff semiconductor exports to the United States. On China, he said an unexpected recovery could provide upside to Malaysia's trade prospects, despite recent data showing slowing industrial production as well as weak retail sales. Now, separately, University Tunku Abdul Rahman economics professor Wong Chin Yong said that Malaysia's trade outlook in the year 2026 could remain bright if the global AI investment cycle continues and trade diversification efforts are intensified. Still on local news updates, Hong Leong Investment Bank Research expects earnings prospects for Malaysia's rate sector to remain supported by company-specific strategies, including asset injections, tenant remixing, and improving occupancies. In a report, the research house said retail rates are also set to benefit from seasonal uplift in the fourth quarter of financial year 2025, as the year-end festive period and also school holidays typically drive stronger tenant sales and variable rental income. Now, during the recent third quarter reporting season, Hong Leong Investment Bank Research noted that Central Rate, IGB Commercial Rate, Access Rate, KLCC Property Holdings and Pavilion Rate delivered earnings broadly in line with expectations, while Sunway Rate outperformed on the back of stronger hotel occupancy. Now, it said quarter-on-quarter earnings were largely muted, and that's due to limited seasonality in the office and industrial segments and the absence of festive-driven retail demand. On a year-on-year basis, earnings growth was supported mainly by acquisitions, with further upside expected from upcoming asset injections. The research house now added that office assets continue to show improving occupancy levels despite persistent oversupply, pointing to a gradual recovery in the segment. Now, from the fourth quarter onwards, Hong Leong Investment Bank Research expects that rates worth recently completed acquisitions to deliver stronger earnings contributions, while IGB rates income should be boosted by the injection of Mid-Valley South Key, which was completed in November 2025. Looking ahead, they highlighted several acquisition pipelines worth monitoring. This includes the Paradigm Rates planned injection of Hyatt Place Johor Bahru Paradigm Mall, Lee Meridian Petaling Jaya, and Premier Hotel Klang, with a combined valuation of about 500 million ringgit, targeted for the second half of the financial year 2026. Amanah Raya Rate is also acquiring an industrial property in Teluk Panglima Garang for 39 million ringgit, while UOA Rate has announced plans to acquire assets at UOA Business Park in Glenmarie for 200 million ringgit. Now, Hong Leong Investment Bank Research said the broad-based improvement in office occupancies across the sector indicates that recovery is firmly underway, supported by improving tenant demand and flattish to positive rental reversions. It also added that Malaysia's shift towards high-tech and high-value industries is creating structural demand for office-based functions such as research and development as well as regional operations. Now, the research house maintained its overweight call on the rate sector, citing its defensive nature, resilient income profile, and attractive valuations. They reiterated that Sunway Rate as their top pick with a target price of 2 ringgit 52 cents, and that's supported by its diversified portfolio and visible pipeline of quality asset injections. Pavilion Rate was named the second top pick, upgraded to a buy with a higher target price of 2 ringgit and 2 cents. That's because the research house said its outlook remains favorable on the back of a constructive tourism outlook expected to lift footfall and spending at its flagship malls. Now we'll take a short break, but don't go away. We will return shortly after the break with some more corporate news developments. Welcome back to the Midday Roundup. Let's continue with corporate news developments right here in our country of Malaysia. So, first up, Bank Pembangunan Malaysia Berhad, also known as BPMB, has formalized a 97.63 million ringgit term financing facility with Coronate Properties Sdn Berhad to fund public infrastructure works for Coronation Square, an integrated mixed-use development designated by the Johor State Government as the catalyst project for the Ibrahim International Business District. Now, in a statement, BPMB said Coronation Square, located along Jalan Tras and Jalan Abdullah Ibrahim, is designed to enhance urban connectivity and anchor Johor Bahru's transformation into a more walkable and economically vibrant city centre. A key feature of the development is a 210-metre elevated pedestrian walkway that will connect directly to the upcoming RTS or Rapid Transit System, as well as the Link's Bukit Chagar station, providing a 4-minute walking connection. Now, BPMB said the link is expected to improve commuter convenience, encourage public transport usage, and help ease congestion in the city. The development is projected to generate more than 9 billion ringgit in economic spillover effects and create up to 60,000 jobs over its lifespan. Now, Coronation Square will comprise serviced apartments, office towers, medical suites, a hotel and retail components, positioning it as a new commercial and lifestyle hub in Johor Bahru. BPMB Group Corporate and Investment Banking Managing Director Wee Yi Tat said the project aligns closely with national development priorities. He said the financing reflected BPMB's commitment to funding high-impact infrastructure that strengthens economic fundamentals while promoting sustainable and accessible mobility, adding that Coronation Square's integration with the RTS link positions it as a transformative development for Johor Bahru. Meanwhile, Coronate Properties Chief Executive Officer Kok Wai Singh said Coronation Square is designed to act as a catalyst for the city's regeneration by combining modern infrastructure, improved connectivity, and vibrant community spaces. He said that BPMB's support enables the company to deliver essential infrastructure that will enhance accessibility, encourage public transit use, and support Johor Bahru's evolution into a globally connected metropolis. Up next, we have some business updates. Bijak Sdn Berhad, Malaysia's largest online insurance aggregator, is considering an initial public offering or IPO within the next 2 years as it accelerates plans to expand into Europe. Now, founder Wei Lo said the company is targeting entry into Spain and Germany in 2026, following recent expansions into Japan, Taiwan, and Thailand. The move would mark Bijak's first foray into Europe, focusing on markets with well-established auto insurance sectors. In the first media interview, Lo said that Bijak's gross written premiums rose between 20 and 30% this year and are expected to grow at a faster pace as the company enters new markets. He added that the business has been profitable since its inception in 2019 and carries very minimal debt, although he declined to disclose detailed financial figures. We're still very young as a company, Lo said. If you look at our other peers in other markets that are large, in China or in the United Kingdom, it takes about 20 years to really maximize the potential and increase the penetration. Lo said the proposed IPO would help fund overseas expansion and provide liquidity to employees through stock grants. As part of its growth plans, Bijak aims to double its global workforce to nearly 400 people by the end of 2026, from almost 200 currently. Now, the 36-year-old entrepreneur said Bijak's business model was inspired by Ant Group Co., the operator of China's Alipay platform, while insurance technology is well developed in markets such as the United Kingdom. He noted that adoption remains uneven across Asia. Now, Bijak currently has 7 million users and partners with 16 insurance brands on its platform, including Germany's Alliance SE and Japan's Tokyo Marine. Lo's entrepreneurial journey began early after he dropped out of pre-university program at age 20 due to family financial difficulties. Before founding Bijak, he was involved in aluminium trading and 2 e-commerce ventures that did not succeed. He did cite Warren Buffett as a key influence, saying he has read all of Berkshire Hathaway Incorporated's annual letters since 1965 and admires the billionaire investor's long-term philosophy. In a quote, he has this quote that he emphasized a lot that I practice. You find out who your role models are and copy them. That's what Lo said. And finally, we're going to be wrapping it up with some major corporate developments and deals across Malaysia. At number 1, our main headline, Velesto Energy Berhad. They'll be selling its jack-up rig Naga 3 for 63 million US dollars. That's approximately 258.4 million ringgit, booking a pro forma gain of 17.1 million ringgit as part of a fleet optimization exercise. Our next headline, this is a big one. New York State Gaming Commission unanimously awarded casino licenses to Genting Malaysia Berhad, Bally's Bronx and Hard Rock Metropolitan Park, ending a decade-long process. At number 3, PTT Synergy Group Berhad has secured a 35.9 million ringgit earthworks and ancillary works contract from Sime Darby Property Berhad for the Bandar Bukit Raja Business Park in Kapar, Klang. Our next headline, Karamin Petroleum Berhad secured a 34 million ringgit contract from Petronas Gas Berhad to replace the gas pipeline linked to the Putra Heights explosion. Our headline at number 5, Mesiniaga Berhad secured a 19.8 million ringgit contract from the Ministry of Education to lease IT equipment for Northern Sarawak schools. Finally, the headline for our 6th story is Jayshen Corporation Berhad. They've aborted their plans to sell 5 pieces of freehold land in Johor Bahru, totaling 4.61 acres, after its intended buyer, Plastico Sedian Berhad, failed to secure financing to complete the 35 million ringgit deal. That is a wrap-up for the Midday Roundup with me, Wanizul Islam, right here on Kleverstock. Thank you so much for choosing us, investors. Have a wonderful day ahead. Stay tuned for our upcoming live stream programs, and we'll see you again shortly.